It's a good afternoon to you live from the Johannesburg Stock Exchange. My name is Arabile Kumete. We welcome you then to this market sense portion of the show then to get a grip of what's happening around the world when it comes to the economy and the market front. Of course, quite importantly, this week is going to be quite significant on the local economic front. We have retail sales that are expected to come out from Stats SA on Wednesday. That should tell a clear picture of how indebted or how difficult things have certainly been for the consumer. 6.9% fall in retail sales, or the retail sector in 2020, the biggest fall in over a decade. This year, though, things are expected to see much of the same. We've seen price hikes when it comes to electricity. Of course, even the fuel price going up, and another 15.63% price hike coming through from Eskom is also set to play its part, so it's going to hurt. On the international scene, the FOMC, the Federal Open Market Committee, that's the Fed out in the United States, is also set to put out its interest rates decision, and perhaps same expectations when it comes to inflation. And whatever happens there should determine then what happens with the market. A little bit of a nervous trade across the global market front at present, as a lot of them worry about what exactly is going to be said then by Fed Chair Jerome Powell. All right, then, into the market we go. As I said, nervous trading. So you're seeing the Shanghai Composite lose almost 1% earlier this morning in the Asian trading picture. So unfortunately, taking in that sense of negativity that has filtered through into the market. But the Hang Seng and the Nikkei out in Japan and Hong Kong managing to eke out some gains, 1/3% better off for the Hang Seng. The European trading picture has looked beyond the Fed, however, and decided to go on its own merry way, and it seems that investors are willing to plow a little bit more into the European market front, with the FTSE 100 out in London and the CAC 40 out in France being the biggest gainers there. Locally, though, we are internally affected, though, by that story out of the Fed. They're expected to only make that announcement on Wednesday evening local time then, but we're still going to trade nervously. The inflation expectations there, if those are set to get a little bit higher, it does mean that the Fed could then begin to increase interest rates at some stage, which could certainly hurt the market across the board. So 0.2% weaker is the local index. It's just below that 68,000 point mark. Platinum miners are the ones going higher today, 0.8% better off there, with resources overall though dipping down over 2/3%. Financials are also hit around 1/3% today, with industrials following the same sort of trend that the market is following, 0.7% weaker. Banks, one of the biggest losers, more than 1% loss there. In terms of stocks that have gone higher though today, the likes of Vodacom enjoying themselves today at 133 Rand and 45 cents a share. That's up 6.4%, a big gain there. Royal Bafokeng Platinum does take on the mix of that platinum miner going higher there. That goes up 4.5% at 114 Rand a share there. While we do have the likes of Mintek, Murray and Roberts, Kumba Iron Ore and Sohosan all going down over 3% as well today. Negativity reigning supreme on that front. Very quickly then onto the commodity board. We're seeing Brent crude oil slightly lower, 0.1%, still hovering in and around that $70 a barrel mark, while platinum and gold are seeing some gains, but not too much to write home about on that front. We are sitting slightly better off, and that really comes from the fact that we're seeing the US market find some negativity then, and as the dollar weakens then, we do get some strength on our side. 14.85 against the US dollar, 0.5% stronger there, and against the euro at 17.72, 20.67 then for a British pound. Let's chat then to Bright Kumalo from Vestac Asset Management as we unpack this market picture as well. Bright, it's all about the Fed this week, and that will be the key focus. You think the market will continue to trade nervously until that announcement?
Look, I think everyone is stressed. When I say everyone, I'm talking about investors specifically. They're stressed about, the potential rise in inflation, especially in the United States or North America overall and other first world countries. And obviously that's why we're waiting on the Fed's decision on Wednesday to see what happens in terms of, monetary policy, and obviously whether, they're going to stop easing now and start maybe increasing those interest rates. But then again, we can't really say much without any information. So all we can do, even us as investors, all we can do is just wait until Wednesday to see what happens. And obviously that will set the tone of what's going to happen probably for the next 6 months.
So what is this then? A case of sell the rumor and then buy the fact? Is that what the market is sort of getting itself into?
Of course, we've seen this numerous times. You sell the rumor and you wait in the sidelines and obviously and hope for the best. But then again, I wouldn't rush to sell the rumor or do anything of that nature, because I'm a long-term investor, and that's what we encourage all of our clients here at Vestec to do. So don't always just rush out on the first set of news that you're hearing, especially if it's not news of the underlying companies that you hold.
Yeah, that becomes very critical. Depending on your risk appetite, a lot of the news flow doesn't necessarily mean you need to move in a particular direction. Speaking of news flow, though, Exxaro coming out with a trading statement, then they expect their profits to plunge. In a time when you've seen the commodity prices perhaps go a little bit higher, what's the effect here? What's happening to Exxaro, and why weren't they able to take big advantage of the commodities that have certainly gone higher over the last year or so?
Yeah, I mean, they announced that basically they expect headline earnings to be down about 6% over the past year. This has to do with apparently a lot of accounting once-off items. So I guess we'll have to wait and see what those items are. And obviously, they say they've actually earned a little bit more on coal exports in terms of, they've seen volumes increased on that front, which is actually something you should just only focus on for this company. So if, those exports are increasing, even though they didn't benefit on the rand side because, the rand was strong, it wasn't actually weaker, so it worked against them. But overall, in the long term, that should flatten out. I guess, they operated good under those circumstances.
Yeah, any more interest then when it comes to the mining sector, though? I speak particularly because it is a sector that is seeing what some are now terming a super cycle. We'll, of course, wait and see really if that continues to be the case for the near future. But do you think that this continued interest will be there? Should the interest be in the commodity itself? Or should we be looking at the companies which have certainly tried to restructure their businesses quite a lot over the last couple of months?
Look, I'm an investment manager, so every time I find a question like that, I'm always inclined, to veer on the side of, investing directly into those companies and those businesses that are going to, benefit from a certain trend rather than buying an arbitrary, commodity. But, we've seen some of these arbitrary commodities doing exceptionally well, especially those, that are used in catalytic converters. They tended to do well. But if I were an investor in this space, I would buy a diversified miner, not something like Exxaro that, depends solely on one commodity. So diversification has always been, the thing that makes sense. And this is what I would do in this case if I were an investor. But then again, in my case, I feel like there's a lot of, opportunity costs to be invested in commodities versus everything else. Yeah. So I'd rather put my hard-earned rands or dollars, in technology, for example, that I.
Yeah. Very quickly, Mr. Price buying Yappy Chef, good move?
It's definitely a solid move. I'm a supporter of Yappy Chef myself, and I guess that's anecdotal, and it doesn't mean anything. But yes, for those who don't know what Yappy Chef is, it's basically an online company that focuses more on kitchenware. So apparently it was founded in 2006, something I didn't know. So I learned something new today as well. And they've got two primary operations, obviously the Yappy Chef online and their retail division, which also focuses on wholesale, and they have about 7 stores. I personally thought they were only online, maybe just, a function of my age, and how I consume products. They develop, they import branded goods, and they also, like I say, do wholesale distribution. So definitely 2 thumbs up from me, and kudos to Mr. Price for buying Yappy Chef, and hopefully, at not too high of a price.
Yeah, well, certainly does bode well for them. The retail sector is very critical, and I suppose it does tell you that they are looking to diversify themselves as well, particularly in that homeware and kitchenware brand. Bright, always good chatting to you. Thank you so much for the time. Bright Khumalo from Vestec Asset Management joining us here on Market Sense as we unpack the market and make sure that you are on point. Thank you so much for joining us here live from the Johannesburg Stock Exchange, giving you that market sense from me and the team here at the JSE. That's where the buck stops.